When we look at the financial markets, we see robust, decentralized, strong, intelligent, well-handled systems. Actually, not even close. Every crisis we have seen has always exposed the massive fraud and lies which assist the rise in that particular financial sector or instrument. It's really dangerous and puts pensions, savings, and livelihoods at risk. You came here for the truth, so let me unveil that for you. Today we are going to look at the $100 trillion market. Let's begin. A very big round number. World equity index market capitalization is a whisker away from $100 trillion. This has come a long way since the financial crisis, but look at it throughout 2016 and especially in 2017, where it has become exponential in its gains. Why has this happened? Well, according to the financial mainstream media, we have been told that the economy is doing well, and that is showing up in the stock markets around the world. Equities are rising as a result of a good economy. Well, as far as I'm concerned, that information is false. ECB takes the lead. Central banks all ramp up their balance sheets after the crisis, but the ECB is carrying on. So we can compare all of these together. What I find interesting from this chart and others that you will see regarding the central bank purchases, it's only going back from 2007 here, and the way that they show this chart is in the number of trillions. So it goes from, let's say in this case, 1 trillion up to 4.5 to 5 trillion and beyond. When you look at it on that scale, it doesn't look too impressive, doesn't look too amazing. But understand that's $5 trillion, and then you have these three central banks, that's $15 trillion between the three. That's extreme. And that should be represented in a chart that shows the truth, where it is off the charts. But these are not true. The central bank balance sheets, you can go to the St. Louis Fed, you can see their balance sheet, you can see the CSPP program that's being done by the ECB, you can see the BOJ buying 75% of all of the ETFs and how they're buying stocks and they're buying everything in Japan essentially. And that does not account for the total amount that has been printed. Why? During the financial crisis, we saw the Federal Reserve printing at least $16 trillion, giving it to central banks giving it to institutions all around the world. That's a limited audit of the Federal Reserve, very limited in scope, in size, and time, and everything else. How much did they actually print? We don't know, but it was at least $16 trillion. So many would say, the reason I'm mentioning this is that central banks, they print up, let's take the Fed. Fed prints up $4.5 trillion. Well, the stock market is $100 trillion. There's a big difference in between the two. But I would suggest that everybody, let's all take a look at the real information. So we know that the Federal Reserve printed at least $16 trillion. Add on top of that the $4.5 trillion. You're looking at about $20 trillion. That's one central bank. They're probably the biggest culprits, but we have no indication to determine what was actually printed because it's all behind the scenes. So there's at least 20 trillion right there. Then you add on to that all the other central banks probably engaging in more than what we're being told as well. And I would have to venture a guess that all of the central banks are the ones pushing this market up. Almost entirely. We are simply riding the wave. Any investor out there, any average investor, simply riding the wave. Comfortably numb. 60-day volatility for stocks dropped below that of bonds for the first time this year. And you'll see where that is headed. At the point here at its peak, nobody trusted anybody. There was this certain shock and awe that was present in the markets. What was going to happen tomorrow was uncertain to everybody. All right. Look at this. Most European government bonds yield less than the minus 0.40 ECB deposit rate. A 2-year yield. Okay. Think about this concept, and I really want you to think about it. A 2-year instrument, okay? So in a 2-year period, what would you want your returns to be? Well, let's just say average return 5%, maybe, what they claim anyway, financial assets. A 5% return, you'd be happy with that. If you go to a standard, mutual fund or something. If you're getting 5% a year, that's a good return. Over 2 years, let's say 10%. They are going to give you, in the Netherlands, congratulations Netherlands, by the way, minus 0.7%. You actually get less at the end of that 2-year term. That's insane. That's ridiculous. Finland, you get the silver medal. Germany, you get the bronze. This is disgusting. This is terrible that they even have this. How can this ever exist? A negative yield. And we are talking about Europe, who's in big trouble right now. There's so much debt. This sovereign debt crisis never finished. It never ended. And here we are today offering negative yield. Hi, here's some really dangerous assets. Would you like a negative return on them? It's supposed to be the other way around. The yield is supposed to be increasing as time goes on because the dangers are compounding. But because the ECB is willing to buy up all the garbage, they simply say that there's no risk involved. What a joke. What a true joke that nobody sees the danger in this. The volatility is going down, and it seems like everyone is becoming complacent in the alternative media, and forget about the financial mainstream media. What a load of bull. Not such a high yielding market. Non-investment grade European corporate bonds yields fall below 3% for the first time in 2017. Okay, and looking back at this from more so where the sovereign debt crisis began, however you look at it, they've been falling. But as far as I'm concerned, the problems are worse today than they were during that peak. Below 3%. On non-investment grade, you're talking about very risky so-called assets and investments. And you're going to get 3% return. That's a joke. Anybody who buys this, even if it's a company, a $1 billion institution, they have put all of their individual investors at risk. This is garbage. These are the ones that fail first. Look, if you're buying bonds, corporate bonds, government bonds, you at least have to buy the higher ones, the better ones, because you know that the weaker ones will go first. I mean, it's going to happen very fast. None of these people will hold to maturity anyway. But you would never want to hold the garbage because that is utter garbage. I mean, all of it is garbage. And you will see how fast this thing can come down. All of that, the collateralized debt obligations, the mortgage-backed securities, everything that's been securitized along this way comes unraveled. Okay, these derivatives come unraveled. And that was the threat during the financial crisis. Well, everything's still unraveled and it hasn't been, put back together nice and neatly. It's still in the same terrible condition that it once was. Nothing's been resolved, and I happen to feel that we are going to have a crisis on our hands one day, but anytime I talk about it, I get accused of spreading misinformation and fear-mongering. Well, I'm sticking to it. Flatter and flatter. The U.S. yield curve has flattened steadily over 2017. You can see where this has headed recently. And This is the generic 2-year versus the 10-year U.S. Treasury yield spread. Another one to look out for. Many technical investors have been watching this, and of course we'll cover it here briefly. The reach for quality yield, cumulative weekly percentage of the AUM flows. Look at this as well if you're interested. You know, as far as I'm concerned, what we need to be paying attention to is the central banks and what their activities are. And this last one here, corporate bonanza with 1 month to go. 2017 sales are already 10% above the total for 2016. I, for one, do not believe this type of deal when they try to tell us that, in this case here, euro-denominated corporate debt across all ratings. Who is buying it all? Are actual investors buying this? I don't believe it for a second. It's central banks somehow funneling their money in. Art for art's sake? The unidentified buyer of the Da Vinci artwork broke the record. And you'll see that there have been millions and millions that have been spent on these pieces of artwork that have really pushed it into a new category. Some would say that this is used for illicit activity because you can then transfer a large amount of wealth between one individual and another, and it's not going through the banking system or anything else. Perhaps, I don't know if necessarily buying a painting that's $450 million is the way to do that. You know, there's probably better ways, but this is something to look at when you realize that collectibles are becoming very interesting to people with a lot of money on hand. They are diversifying into other objects, into other sectors and everything else, and they're apparently able to buy things that are worth $450 million that you hang on your wall. Well, what I see is a devaluation of the currencies when what means a lot to people, what matters most to people, is the things that are just being taken for granted, taken advantage of, and yet some things are costing more and more. Why is that the case? You know, just to restate my thought here, something like food. We all need to eat, we all need to drink water, we need a place to live. And these things, year over year, become more expensive, much more expensive. And it's the currencies that are being devalued, yet for the average person, all we need is these few things. We don't need $450 million paintings. And I don't necessarily say that, you know, it's bad that somebody bought this. If somebody wants to pay that, then of course they're free to do so. There's nothing wrong with that. But what does it say about the value of the dollars, of the currencies that we use? Well, I'll leave that up to you. If you found this video informative, please give me a thumbs up. Give me 2 thumbs up. Give me 3 thumbs up and 2 toes up as well. If you found this video informative, I know you will find my books, The Money GPS, and my new release, Global Economic Collapse, even more informative. You can flip through this book at Amazon. Links are in the description below. Take care.